Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Fresh new week, Monday morning. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, good morning. And finally, it feels like the monsoon has arrived. It's a full 24 hours of rain. Temperatures have cooled down. Yeah. But I think in global markets, cool down is not the kind of phrase that you'd be using.
Well, that's right. There's more escalation, I think, that we've seen between Iran as well as Iraq. So that's a bit of an issue, both from a market perspective as well as, for equities as well. But, those are the depressing footage that's up for you on the screen. Hopefully, there is some kind of de-escalation that takes place on that front. Good for humanity, good for markets, and we move on with life. But over the weekend, not too great news coming in on the Israel-Iran front. Though, as you all said, here in Mumbai, monsoon's picking up.
Here.
They're back.
No, absolutely. And I think the footage, actually shifting from one to the other, rains here and destruction elsewhere, quite a pretty stark sort of contrast with regards to what is happening. Let's just take it from the front, take it from the top in terms of what you need to know as we begin another new trading session. So the strikes continue between, Israel striking Iran earlier, then of course Iran responding, and now this is the fourth day of strikes. No end in sight. So the conflict continues. 4 days in a row, and it's kind of sort of becoming a more pronounced face-to-face, it's getting spread out as well. It's not just sort of, one location in that sense. President Trump, of course, has commented a few times over the last 2 days, and he's repeatedly expressed hope for a peace agreement. These are largely through social media posts, etc. I think he's also spoken with the news channel ABC in the US. Trump has claimed that many calls and meetings are happening behind the scenes, essentially suggesting that there is more at work than what you and I can see, and perhaps some peace, etc., will be achieved. Trump also said he had a 1 hour-long call with Russian President Vladimir Putin over the weekend, and he said that he's open to having Putin sort of mediate the conflict between Israel and Iran. A lot of sort of commentary coming through, but Trump being Trump, but another sort of post and comments, etc., he said, well, sometimes they just need to fight it out. So it's a little bit of a, and I think it's broadly, those comments, this and that, largely reflect the uncertainty in the world right now, that the big security anchor around the world, which was the US over the last 50, 60 years, is no longer there. And I think that is becoming more and more clear as we go through, the first few months of this Trump presidency. Now, Trump, by the way, there are reports this morning that Trump reportedly rejected an Israeli plan to assassinate Iran's supreme leader, Khamenei. So this is what is coming through earlier today. Now, oil price risks are skewed higher. It's not as if oil is substantially, higher compared to where we left off on Friday. The big risk, and we put this out at 10 o'clock in the morning on, actually even earlier, on Friday morning, of course, is the disruption. The big disruption will be caused if there's any closure to the Strait of Hormuz, which carries, 30% of the global oil supply, which carries bulk of the oil, which comes into Asia, countries like China, etc. So I think that's the big one. It's not happened. It's actually never happened, even when past conflicts have flared up, etc. But that remains the big risk in that sense. Oil prices on Friday were up almost 8%. They remain, I think this morning they're up another $1, so about 74, 75 odd dollars, so nothing substantially higher. From early May levels, oil prices are up about 25%. It's kind of sort of it adds up to quite a bit if you just look at it like that, slightly longer timeline. US equities, they were weak on Friday. S&P was down 1%, NASDAQ was down about 1%. But just look at what's happening, and this is the crazy thing. Look at what's happening with treasuries, or actually look at what is not happening to US bonds, government bonds. Look at what is not happening to the dollar. Typically, when you have big geopolitical flare-ups, bonds would be bought and the money would go back into the US dollar. There is absolute lack of this, safe haven. Both are safe havens in that sense. The US treasuries and US dollar, absolute lack of safe haven demand for US treasuries and the dollar actually is a story in itself. And I think I don't remember the last time you had such disdain for these two asset classes. And I think it kind of goes back to the entire talk about whether, US as an asset class perhaps is getting a little unexceptional, etc., etc. So that's another conversation. But I think this is quite telling. There are lots of central bank meetings this week. FOMC, Bank of Japan, the Swiss National Bank meets, Bank of England, and there are 7 more. So you got about 11, 12 central bank meetings. The big ones, of course, I mentioned. We'll talk more about this as we go along as well. Expect a lot of commentary, by the way. There is a G7 meeting with Trump attending in Canada, which is taking place. There is also going to be a NATO meeting, which I think is going to be eyed over the next many days. So things to keep an eye out on. Just to circle and tie in the levels here. So the Nifty last week gave a negative weekly close. It basically, because it's a negative weekly close after many weeks of continuous uptrend, the high of 25,222 becomes an important resistance level. But I mean, we're not talking about that yet. So we'll take it step by step. Immediate support levels are 24,848, which is the 50% retracement. These are resistances, and 24,936, which is the 61.8% retracement of the recent move. Nifty Bank closed below the 20-day moving average and the previous low as well. This is Friday's session. Here the resistance comes in at 56,100 and then 56,323. It's a 50% and 61.8% retracement. And support for the Nifty Bank comes in at the 40-day exponential moving average, which is 54,881. So those are immediate near-term levels to keep an eye out on. GIFT Nifty is indicating a bit of a bump after Friday's risk-off tone. So we've got about a 70-point higher start. Surabhi.
Yeah, absolutely. I mean, I think markets are trying to move past what we've seen over the weekend, hoping against hope that this kind of, at some level, eases out now with 3 days of strikes already. So what you're seeing across Asia this morning is actually some green. Markets like Japan are doing fairly well. Japan's up 1% actually. The Hong Kong market is absolutely flat. It's directionless. Mainland China also, maybe a little smidge of a green. That's all you're getting. There's some data that's come out of China. I'll come back to that in just a second. US futures also, for what it's worth, US futures after the complete slam dunk on Friday are indicating that we might have a positive opening. But it's very early on in the day. So let's see how some of these things progress. The VIX should keep that in mind. I mean, the huge spike in volatility on Friday, CBOE VIX was up 15%. And for us as well, the India VIX was up 7% because this was this new joker in the back with what's happening in West Asia. Crude has continued to climb. It's not a very big leg up, but nonetheless, we're still getting another almost $1, 1% up on crude oil prices. Now, what has happened is that while there is no talk of choking the Strait of Hormuz so far, the attacks are hitting oil infrastructure in both countries. So what we got over the weekend was Israel hit the South Pars gas field. It's the largest in the world. 2 of the wells were hit over there. And then there was a strike at an oil depot in Tehran as well. And on the Israeli side, at Haifa, the oil refinery has been damaged. So oil infrastructure is getting targeted. But as of now, the Strait of Hormuz seems to be operational. So that's the good news. Gold, while, I take Prashant's point that it's not like there's a huge rush towards the dollar or the US treasuries as safe haven, gold has continued to play that part. And again, this morning, you're seeing a little bit of an uplift after a 1.5% move on Friday. By the way, so what has the US president said in all this? Among the latest posts, here's one that kind of caught my eye. He's going on to say that Iran has to make a deal. There's no choice. Iran must make a deal before there's nothing left and save what was once known as the Iranian Empire. No more death, no destruction. Just do it before it's too late. But that's the operative part of what was a really long post. So let's see if, some of that mediation indeed comes about or not. Now, for us, because of these global events and the risk-off that we had globally, the markets attempt to go above the trading range, that really fizzled out. The Nifty all of last week could not make a decisive move above 25,100. Will the global unease end Will we get back to taking the top of the range or not? That's something to keep in mind. The flows were negative, so FIIs sold off, not too much, but 1,200 crores of selling is what we had on Friday. Domestic institutions were offering support with 3,000 crores of buying. Very quickly, two stocks in news. Zee, I'll watch out for. The board is going to be meeting today, and there are two sets of board meetings that Zee is doing. First is with an investment banker who's supposed to bring all kinds of options on the table, including fundraising, a business review, what more can be done on the business. And then there's a second board meeting where the board will deliberate on what the investment banker has told them. Let's see. And for Bajaj Finance, the record date is today, the stock split and the bonus. That is happening. By the way, just to circle back to Asia, I said there's some fresh data out, so let's put that on the board and leave that with you as well. Retail sales are up 6.4%. That's actually pretty good. It's beaten estimates of about 5%. It's also much better than the April data of 5.1%. So retail sales are looking strong in China. Industrial output has slowed down. It's down to about 5.8% versus 6.1% in April. So mixed data out of China this morning and mixed mood in the Asian market territory, at least for now. Nigel.
Well, geopolitical tensions, they have taken center stage. No two ways about it with regard to global markets. In the near term, risk of trade is likely to play out, which means that asset classes like gold could see some bit of buying, while equities could remain a little bit skittish. That's in the shorter term. However, in the longer term, history suggests that wars or any kind of conflicts like these normally provide the best entry opportunities for long-term investors. So keep that in mind. Don't lose heart. Prepare yourself for near-term volatility. But in the longer term, actually, some of these opportunities do provide great entries. Well, moving to what happened in index futures. Well, if you look at it, the FIs, they continue to add some short positions, while clients, they did the opposite of that. They added close to around 3,400 long positions. And because of their addition that we saw on the short side, the short positioning has moved to around 81%. Long positions of the FIs, they're holding at around that 19% odd mark. So it's at the upper end of what we have seen with regard to a range. Even if you look at it in absolute terms, remember the shorts, they did cover out. We went down to around 86,000 contracts. In the last few trading sessions, the FIs, they have added shorts here again. And that's why, in fact, it's moved up a tad bit on that front as well. We're currently at around 1 lakh contracts on the short side. Moving to the options data then, the PCR continues to hold at around 0.9 odd because we've seen a lot of action both on the put as well as on the call side. So the call writers, they believe that they've got the higher levels covered. And that's why the 24,700 call added close to around 25 lakh shares. The premium out there is around 170 rupees. But what's giving you hope is we did bounce from the lows in Friday's trading session. And the 24,500 put, well, that continues to see a good amount of addition. Which brings us to the levels. Going by the options data, going by the technical levels, I think the 20 DMA, that becomes a reference point. So 24,850, that's a bit of a resistance just in the near term. The longer term resistance comes in at around the 25,200 odd mark. Support going by the options data, going by the recent low that we have seen, this level you don't want it to break on the downside. 24,400 to around 24,500 or thereabouts. The Nifty Bank as well, well, that did end below the 20 DMA. However, the recent low is something that you'll want to track, and you wouldn't want it to break this 55,100 odd. Keep in mind, this is an index that went to 57,000 at the start of the week, and then it's pulled back closer around 3% or thereabouts. So that's the broad range that you're looking at. Stocks that I'm looking at, well, I'm looking at Vedanta for today's trading session. And the reason is they're going to be meeting in the next couple of days to pay out a dividend. We'll tell you a little bit more about that. In Friday's trading session, it bounced off the crucial support zone, 20 and 200 DMA, coming at around that 440 rupees or thereabouts. And crude oil prices have spiked. Well, that's a play on crude oil prices moving up as well. So Vedanta is the stock that I'll keep out on my radar from here on. Let's keep an eye on it.
Okay, all right, got it. So Vedanta is going to be on our radar for sure. Thanks for that, Nigel. Let's quickly get started with the equity call of the morning. Chetan Sheth of Nomura says that in the near term, he believes the market will focus on geopolitical developments in West Asia, where tensions between Iran and Israel have escalated quite significantly. He says while previous geopolitical events have typically caused only temporary market volatility, they advocate some caution given the strong rally in equities amidst unprecedented policy uncertainty, suggesting a potential for de-risking and profit-taking. He adds Asian stocks could be particularly vulnerable, though through two channels. The first is sustained higher oil prices impacting oil-importing countries and risk of sentiment affecting high beta markets more severely. So that's Nomura advising caution.
Okay, well, some technical calls coming through as well. So this is Lawrence Belanco of CLSA who says that there is no change to their outlook for the Nifty as the price action continues to hesitate following the May to June price momentum divergence. He says this has resulted in the market forming a minor consolidation pattern between 24,400 and 24,462 and 25,116 and 25,200. 25,116 for the longest time, of course, has been that upper end of that range. He adds, as long as the current consolidation corrective price action remains above the upper boundary of the cited double bottom that coincides with the 200-day moving average at 23,807 and 24,067 area, they would still expect another thrust to the upside and likely new all-time highs for the market.